Our record from application through to rollover is 7 days, which I'm pretty sure is unheard of. That's not usual, but that is our record.
Need an entity name ASAP. How quickly can you get that entity name established for the referral partner to be on the contract?
Yeah, we can usually have the entity names within sort of 2 or 3 days. When you invest in property inside super, negative gearing doesn't really apply because the tax rate is already very low. It's only 15%. If they were to sell the property after owning it for more than 12 months, they'll only pay 10% capital gains tax, which is ridiculously low. But the magic happens at retirement.
Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Hey guys, just a quick disclaimer and just a reminder that this is not personal advice. So make sure you speak with a licensed advisor before making any investment decision. So welcome to this edition of SMSF Insider. Today, we're going to be talking to Paul Whitehead. He's head of client relations at Blue Chip SMSF Services. So he's going to be talking to us a little bit about the setup process of establishing an SMSF. And he's going to touch on a couple of little horror stories as well. But Paul, welcome to the show.
Thanks, mate. Hopefully not too many horror stories.
Exactly. Hoping you could run me through a bit about the process of establishing an SMSF. Once you get an application that comes through, can you just sort of maybe talk me through what happens after that point?
Do you want me to go back to the very beginning, getting the actual lead from the outset? So when I talk to the client and then explain the process. So my explanation of the process to a client will explain the setup process. So normally what would happen is one of our referral partners or so we'll get a lead through for a referral partner, or we might get a direct lead from our from online, from Google, or some of the marketing that we've been doing. So we'll get a raw lead come in terms of a client. So what I like to do is set a Zoom meeting and run through the process in detail. So Zoom meeting usually takes about half an hour. And what I do first is give the client a bit of a background into who we are, so they understand who they're talking with. Yep. So the first thing that I do is explain that there are actually a couple of companies within our organisation. The foundational company is Blue Chip Financial, which was started 23 years ago by yourself. Started as a fairly typical financial planning company doing typical financial planning activities. Self-managed super funds were a thing back then, but it has become a really popular and prevalent thing to do. And more recently, about 5 years ago, you started Blue Chip SMSF Services. So Blue Chip SMSF being the sister company to Blue Chip Financial. And obviously all we do at Blue Chip SMSF is set up and administer self-managed super funds. So, and then most of my clients come through as clients that are interested in property as an asset class. So, you know, that's sort of fairly typical. Most people that are setting SMSFs up so they can access assets that they can't get in industry or retail super fund, direct access to residential property or commercial property. And as we discussed earlier, crypto is a pretty big thing at the moment, but I don't do a lot in the crypto space. But yeah, property is a really big part of what I talk to my clients about. Obviously, there are some differences. If you're investing in property, most people are going to be looking to borrow money. So if you're borrowing money within a self-managed super fund, then you need to set up a second trust called a bear trust. That's B-A-R-E, bear trust, not bear as in grizzly bear. Sometimes called a holding trust or a custodial trust. The bear trust specifically holds the property with a loan attached. If the client was buying a property without a loan, which not too many people do these days, you wouldn't need a bear trust. So the property specifically holds the property with a loan attached. In terms of the setup process, setting up a self-managed super fund that can purchase property is a fairly complex thing to do. That's what we do, all the heavy lifting and the technical stuff in the background. For our clients, we've made it extremely easy to get the ball rolling. So there are two application forms in relation to setting up the SMSF with the Bear Trust. So one's for the SMSF, one is for the Bear Trust. The application forms are actually identical except for the names. So one for the SMSF, one for the Bear Trust. All we need as supporting documentation to get the ball rolling is some ID, driver's license front and back, and a Medicare card and a super statement. Once we have those items, we can get the ball rolling in the background. So the first thing that we do is we'll apply for the company entity. So the structure of the SMSF and the Bear Trust is a self-managed super fund and a Bear Trust with corporate trustees. Corporate trustees is just a type of company. So we apply for the ABN and the ACN and the tax file number for those companies. Once we have those, then we can generate the trust documents. So the trust documents are the standard legal documents that formalise the setup of the SMSF. We express post those out to the client. Unfortunately, we're still in the dark ages. Trust documents have to be wet signed. So we tag them up with sign here stickers, or the guys in the office tag them up with sign here stickers, makes it really straightforward for the client. Send those out. Once the clients sign their trust documents and return them to our office, then we can move on to setting up the cash management account. So every SMSF must have a bank account attached to it. It's a special kind of bank account called a cash management account. The cash management account is essentially the hub of their SMSF. Every dollar that goes into their SMSF and every dollar that goes out goes through that bank account. So it's a really important part of the SMSF. Once the bank account is all set up and compliant, then we can call rollovers from their current super funds. The rollover process is part of the process that is out of our control in a sense. The super funds, industry and retail super funds, like to play games at that time, so they pretend that they've lost stocks and that sort of things. But so that is a part of the process that's out of our control in some sense. But once we eventually get the rollover funds into the cash management account, then it's really handed back over to the guys that might be helping the client with the lending part of the process and the property part of the process. And then the client will secure the property, usually with funding from a lender as well. And then Bob's your uncle. They own property inside superannuation.
Fairly, so it sounds like it's a fairly straightforward, although how you've explained it sounds quite lengthy. The actual setup process sounds quite simple. You've got two application forms, one for the SMSF and one for the Bear Trust.
Yep.
So that sounds pretty straightforward. So that's pretty much all you need, apart from those two pieces of those two documents, which you said they were identical. So two one-page documents, one for the Bear Trust, one for the SMSF. You just need a super statement and some ID. Is that pretty much all you need?
Spot on. Yeah. So I usually explain to the clients that it sounds pretty simple from their point of view, because it is. All we need them to do is provide those documents, which takes about 15-20 minutes if they really want to get the process moving, and then we do the heavy lifting in the background, which is some fairly technical stuff that we need to do in the background, setting up the entities in the right way, generating those trust documents, which are pretty lengthy, but that's what Blue Chip SMSF does, obviously.
Yeah. So if the client is, let's say they've got some questions, do you give them a call, or how do you sort of hold their hand through that process if they're sort of not sure what they're signing, or they want a bit more information, or they're not sure of something? What happens there?
Yeah. So on my Zoom call, I'll always make sure that the clients program my name and number into their phone whilst I'm on the call.
Yeah.
And they know that I'll be their personal contact through the setup process and beyond. So if they've got questions about anything at all, they come straight through to me. I let them know that we've got a pretty big support team, a pretty big admin team that work behind the scenes. But I'm the only person that they need to speak to. They'll have my personal contact details. We do have a dedicated office line, but they don't even need to call that. They can just come through to me personally. They'll also have my email address, but most of them will text me or or call me, and I'll usually hold their hand through the signing of the trust documents. Some clients just sign them straight away and just get them back, and some clients want to go through them in a lot of detail. Every now and then, if a client really wants to go through the trust documents in detail, which is fine, I'd actually rather them do that, then I'll do a Zoom meeting for the trust documents as well. Because the trust documents can look a little bit confronting when the clients first do get them. They're quite thick, and there's a lot of terminology which most clients won't really understand. So I'm more than happy to hold their hand through that part of the process as well.
Yep. And so also I noticed part of that process is there's no advice that's given through this process. So it's essentially what you're saying is essentially clients may already know what they want to do. They might already know what they want to invest in. They're simply using this service to establish the fund in an efficient way without any advice. Is that right?
Spot on. The majority of clients, 99 clients out of 100 that I speak to, they've already decided what they want to do. They don't need advice for that. They've already decided that most of my clients want to invest in property. That's what they want to do. So it's probably more important in a sense that they get an understanding before they come to us. They get an understanding if their fund can borrow money, that part of it is they get the green light and that's all being ticked off. So if the client hasn't engaged a broker, I might refer them on to a broker or tell them to find their own broker. Obviously, they need to make sure that if they are doing that the broker understands SMSF lending. There is some nuance. There's some difference with SMSF lending as to, in comparison to lending in your personal name. So that's pretty important. There's no point setting up an SMSF to purchase property if the SMSF can't borrow money. So I always make sure that box has been ticked before the client sets up an SMSF. But again, most of the clients that I speak to, they may have been referred by a broker or referred by a property group or a buyer's agent, and those guys have already sort of tick that box, and by the time they get to me, they know that their fund can borrow money because that's already been assessed. They obviously know that they want to buy property. Sometimes they may have even sort of got a bit of an idea of what type of property, or in some cases the property has already been selected or earmarked at least. And it's just a matter of talking them through the setup process and getting the fund set up.
Yep. And with the property, so drilling down a little bit on the types of properties that most of your clients are purchasing, are they residential, industrial, commercial? And can you tell me a little bit about that? And if it is a sort of a residential, for example, is it a one-part contract or a two-part contract? I know when you're purchasing something in your own name, you can, or a different entity that's other than a self-managed super fund, you can have what's called a two-part contract where you're purchasing the land and you're paying the stamp duty on the land, and then you go through the build process. Can you do that with an SMSF, or does it need to be a one-part contract? And can you tell me a little bit about that, just a bit about what your clients are purchasing, and a little bit drilling down a little bit regarding the contracts and whether they are a one-part or a two-part?
Yeah, it's so you can buy any type of property inside an SMSF. We do commercial, SMSF setups for commercial properties, also industrial, but the vast majority is residential. The vast majority, the industrial and commercial properties, sort of 1 in 100. By far the most popular is residential, there are differences. If you're investing in property inside super, it has to be a one-part contract. And that's partly to do with the Bear Trust, with the Bear Trust structure. So it has to be a one-part contract. You can't buy a piece of land and then build on it. It has to be either a completed house, completed townhouse, or a completed unit. Doesn't have to be completed in the sense that the actual development is completed and handed over. But it does have to be a one part contract.
Does that come down to, I guess that probably comes down to the single asset rule, which is part of the Superannuation Act. I'm assuming it would be coming down to that, and that's probably the reason you can't have those two-part contracts.
That's right, yeah.
With regards to, so with referral partners, for example, that have sort of, that you look after one of the key, like a key account manager essentially for some other referral partners. Tell me a little bit about their experience before they've used Blue Chip. They may have been using somebody else to establish the funds, and then something may have happened that the process may have been not quite what they expected. And then tell me a little bit about those referral partners that you're working with that have used somebody in the past and then have started using the Blue Chip service, and tell me a little bit about that.
Yeah, so one of the reasons why our referral partners really like to use us is because of what we spoke about a little bit earlier in terms of how simple we've made it for our clients. The clients have already decided that they want to invest in property. We don't need to go through that advice process. Some in the past, the clients, our referral partners might have been dealing with financial planning companies or other SMSF establishment companies that might have as part of their process an advice part, which means that it just adds a layer of complexity that's not necessary. Of course, the clients are quite welcome to do that if that's what they want to do, but most of our clients have already decided what they want to do. They don't necessarily need to do that. So we've just taken a lot of that complexity out of it, made it really, really simple for the clients. And we sort of, because of that, the simplicity of our process, it's a lot faster as well. Not just because of the simplicity, but also because we've got a pretty amazing admin team in the background. But yeah, a lot of the complexity is taken out of it with the way that we do it.
And do you think that comes down to more to do with the no advice, that the fact that it is a no advice model, you're able to do away with, obviously, when there is advice in the middle of the establishing the fund, that is quite a lengthy process.
Not just lengthy, but complex and very, very expensive. I mean, you would know better than anyone. You did that model for 23 years. So we've just taken the complexity out of it. We just provide all the legal documentation, make sure that the fund's set up properly so the clients can do what they've already decided to do.
Yeah. So when these clients they're purchasing residential property, for example, they may have already had residential property. They've purchased a family home perhaps 20 years ago, or they've seen some growth in that. They've maybe purchased an investment property in their own name. They've seen some growth in that. Is it more that they understand property, do you think, more than any other asset class, and feel comfortable with property as opposed to being in equities, which not a lot of people really understand? I mean, it is a beast in itself when you're talking about equities. But do you think maybe it's resi property because I know Aussies do have a love affair with property? Do you think they've had some experience with bricks and mortar in the past, and they're happy to adapt that investment sort of philosophy over into their SMSF?
Yeah, for sure. Most of our clients that are looking to continue their portfolio. So they might have one or two properties in their personal name. They can't borrow any more in their personal name, but they really want to continue building their property portfolio. And the perfect way to do that is to continue that inside superannuation. Obviously, there's some differences. One of the main differences with owning property inside superannuation is how the property is treated from a tax point of view. Obviously, when you're investing in property in your personal name, you get those tax deductions in your personal name. Everyone's sort of heard of negative gearing and how that works. When you invest in property inside super, negative gearing doesn't really apply because the tax rate is already very low. It's only 15%. If they were to sell the property after owning it for more than 12 months, they'll only pay 10% capital gains tax, which is ridiculously low. But the magic happens at retirement. Once the clients hit retirement age, which for the majority of them is preservation age, around about 60, and then any time after that they decide to retire, and you don't have to retire at 60. Most people don't have the ability to retire at 60. So whenever they decide to retire after that, when they put the fund into pension phase, the tax rate goes down to zero. You won't pay a cent of capital gains tax if they were to sell the property, and if their strategy was to pay the property off and live off the rental income forever and a day until they drop off the perch, they won't pay any tax on that either. So it's a really generous tax environment to own assets like residential property. So it's not just about owning property. There's some pretty cool tax advantages to doing it inside super as well.
Yeah, that's a really powerful one when you're talking about the tax advantages being zero. There's no other, apart from having a company established in the Cayman Islands, there's no other real tax benefits apart from, the biggest one is obviously, as you said, paying zero taxes.
You can't really beat that, can you?
You can't beat it. Yeah, that's pretty cool. What about some sort of horror stories? Have you had any sort of horror stories over the years where that you can sort of tell me about that clients perhaps that might not be following doing things they shouldn't do with their fund, and how do you deal with that? What do you do? Do you contact the client? How do you fix that problem and educate them? And what do you do in that sort of scenario?
Yeah, I suppose you might call it a temptation when you have an SMSF. Mentioned it a little bit earlier that there is a bank account that's attached to the SMSF, and for all intents and purposes, it is a bank account. You don't get a bank card to go and sort of tap or anything like that, but it is a bank account because owning property inside super, you still pay all the same expenses. There's still rates to pay. There's still, those type of property expenses to pay, and they must be paid out of that bank account. But I suppose for some clients, there is a temptation to use that bank account for things that they shouldn't be using it for. And obviously, if you've got an SMSF, you can only use your SMSF funds for one reason only, and that is for the betterment of your retirement. But for some clients, there is a temptation, and we have had clients in the past that have used the funds that are sitting in their CMA to go on holidays. That has happened. Wow. And that's I think that's about as bad a thing that you could possibly do
to go
with
on
your
holiday.
SMC. To go on holiday, yep. So that's pretty bad. If that happens, so we've with our tax team. We've got someone that has a look at all of the transactions that have happened with all of our funds, which is incredible. And if there are any sort of dodgy looking transactions, legal withdrawals, they'll be flagged. And if it's one of the clients that's come through my channel, then I'll give the client a call, ask them what they've done. Usually, obviously, if the client's gone on holidays, they know they've done the wrong thing. But there have been occasions where the client has, so I'll give you an example. So a client might do some banking. They might have a Macquarie cash management account, and they might do their personal banking with Macquarie as well. And purely by accident, they may have used the Macquarie cash management account to pay a personal bill, and it was just a pure accident. So that happens as well. Usually, if the client fixes it immediately, then we'll just sort of write the relevant minutes, and then it's fixed pretty quickly. But if the client sort of spent a lot of money and they've gone on holidays and they don't have the ability to pay it back, then they're going to be in pretty big trouble with the ATO.
Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. Just on that, I know when clients do, if a client does withdraw money before meeting a condition of release, that money is then added to their personal income. So if they withdraw $100,000, that then adds onto their personal income, and then they're taxed at up to 45 cents in the dollar. So not only do they have to return the 100, they're then up for 45 grand in tax on top of that. Pretty big no-no. But with I guess is there anything else? Any other sort of stories that stand out? That's a pretty bad
just
one.
on that before I move on, a lot of the clients, they don't realise that as part of owning an SMSF, an external audit gets done on their super fund every year, so they can't hide anything. There is an external auditor that essentially reports back to the ATO of that type of conduct. So that type of thing can't be hidden. And there's also a tax return that gets done on their SMSF as well. So we go through all their transactions in detail as well. So it's never going to be hidden. It's always going to come out. Other horror stories. I'd say that the majority of them are to do with that type of thing, but there is so. Crypto is another one of those assets. Obviously, crypto is a little bit more of a recent phenomenon, but everyone wants to get into the crypto space, and a lot of people are setting up self-managed super funds to purchase crypto that they may not be able to do with the industry and retail super fund. And whilst a lot of clients do really, really well in the crypto space, unfortunately, it's one of those areas where there seems to be a lot of people getting scammed. So there have been a few clients that have given their money to, dodgy crypto scammers, and they've lost it, and they'll never get it back. So that's sort of created a few issues for people that want to invest in cryptocurrency with their superannuation. A lot of the banks have sort of cracked down on that sort of thing, and some of them won't even allow transactions to crypto exchanges.
Yeah, well, that's pretty scary when you hear that sort of those stories.
Yeah.
But would you say, like, how many of those would you see where clients are sort of have been scammed, and is there an education piece around that? Around, if someone's contacting you, how does that phone call come about when you chat to the client? Firstly, for if they're withdrawing funds, when they haven't met a condition of release, and then also what happens if they've been scammed, and is there further education around that? Like what happens at that point?
I really try to push the point on to our clients not to do anything that they're not 100% sure about before they run it through myself or someone in the admin team. Even if they want to get involved in a crypto exchange, we can do some checks and balances behind the scenes to make sure that the crypto exchange is legit. So I really try to press the point onto clients is don't do anything that you're not 100% sure about before you run it past us. That is a service that, it's not even a service really, it's just something that we can check in the background. But unfortunately, it is a self-managed super fund, and if they want to sort of go off and do something under their own steam, then there's not a lot that we can do to stop them before the crash happens, so to speak.
Yeah, okay, that's pretty interesting stuff. What about working with some of these referral partners? I just want to sort of delve a little bit deeper into some of these other referral partners that may have sort of come across our services, and I guess what has been the feedback from these guys that have set up funds in the past with perhaps another service provider, might be a financial planner or an accountant, and then using a sort of a premium document service like ours. What just want to delve a little bit deeper into that. What's been the timeframes of establishing funds, and in the past with whoever they were using in the past with, and then using the Blue Chip service.
Yeah.
What are the time frame differences?
This is going to sound a little bit like patting ourselves on the back, but I can only sort of tell you what they've told us is often where a lot of the property guys that are out there trying to find these properties, really trying to find a premium property for their clients. They're sort of fairly sought after, fairly hard to find. So if they do find something, then they want to make sure that they're going to be able to secure it really quickly. So setting up the fund in a really quick time frame is important to not just the client, but also for the referrers that's scouring Australia trying to find these really sought after properties. So the fact that we can do them so quickly, our average time frame from application through to funds rolled over is somewhere between 4 and 5 weeks, as long as the client's playing their part, and as long as the industry or retail super funds aren't playing silly buggers with rolling funds over. We can usually get the funds rolled over in 4 to 5 weeks, which is unbelievably quick. We actually, our record from application through to rollovers is 7 days, which I'm pretty sure is unheard of, and that's not usual, but that is our record. Obviously, all the stars had to align, but it's usually on average about 4 to 5 weeks. So that's a really important part of it, and part of the reason why we're able to do it so quickly is because we've taken out all of that unnecessary complexity and expense. So it's very much appreciated from our referrers in particular, because we can do it so quickly.
Yeah. And if for example, they need an entity name to be on a contract, can you get at least get the entity name for the referral partner to go on the contract? Can you get that, at least have that? What sort of time frame are you looking at if a referral partner rings you and says, mate, I've got a property that will really suit this client. It's the existing contract's falling over. I need an entity name ASAP. How quickly can you get that entity name established for the referral partner to be on the contract?
Yeah, we can usually have the entity names within sort of 2 or 3 days. So most of our referral partners have never seen that sort of speed before. So yeah, 2 or 3 days for the actual bare trust entity details that will go on the contract of sale. Obviously, the rollover funds hitting the bank account, that's definitely going to take usually between 4 and 5 weeks. But we can get the entity names really quickly within a couple of days, 2 or 3 days.
And I guess that's to do with in the middle of there's no advice piece in the middle of the middle of the establishment process. So I guess that's where most of the time is being cut out, and that's right. Where you're getting your efficiency gains.
Yeah, the first thing that we do once we get the application and the ID and the statement, the first thing that we do is apply for those entities, and normally we get them in a few days. So
yeah. What about clients that perhaps have some insurances in their existing super fund, and they're concerned about losing those insurances? What happens in that scenario?
Yeah, we always, without question, will only do a partial rollover to begin with. So it's always a partial rollover. A partial rollover just means leaving the minimum balance in the current fund, the industry or retail super fund, to maintain the insurances that are in there. It would be a pretty big no-no for us to do a full rollover, hoping that the client's going to be able to get new insurances inside the SMSF if for some reason they're uninsurable, or maybe they've had a health issue in the past where the insurers just don't want to touch them. So we're really cognizant of doing a partial rollover, and a partial rollover just means leaving the minimum balance, which is usually about $5,000 or $6,000 depending on the fund. So you can just leave a small amount of money in their current fund. That means that they can keep their insurances. We roll the rest over into the cash management account so they can organise the property and the lending, and then later down the track, if they want to apply for new insurance inside the SMSF, we can actually do that through our sister company, the foundational company, which is Blue Chip Financial. That's really why, that's the main function of Blue Chip Financial these days, is providing general advice around insurances inside super.
Yep. And so with regards to that, once they've once they've applied for their insurances, it's been accepted, for example, what happens after that point?
Yep. So if they get, if they're able to successfully apply for new insurance, once the new insurance is in force inside the SMSF, at that point we can close down the old account, roll the remaining funds into the cash management account, and then we can provide details to their employer so they can start directing their contributions directly into the cash management account.
Yeah, great. So you sort of, with that type of strategy, you're not leaving the client sort of in limbo without insurances for any point in time. It's sort of
exactly, yeah. So we won't close down the old accounts until the new insurances are in force.
Yep.
Yep.
Yeah, great. What about if they can't get insurance? What happens there if they can't get insurance? They've been knocked back.
Yep.
What happens in that scenario?
Yeah, well, in that case, then it's just status quo. They keep the insurances that they already have. We'll keep the contributions from their employer going into the old fund to make sure that there's always enough funds in there, in the old fund to keep those insurances. And then as they need to top up their SMSF, they can do a rollover every 3 or 6 months or whenever they like, really, which is a pretty simple process. So it doesn't really change anything. They keep the insurances they have, always making sure to keep the minimum balance, keep the contributions going into that old fund, and at least they've got something. At least they've got some sort of insurance cover in the case of the worst case scenario happening.
Yeah. So I guess having those contributions continue to go into the existing fund prevents the policy from lapsing, for example. If they redirect it straight to the SMSF and there's no contributions going in, then obviously the client runs the risk of losing the insurance because there's no contributions going in.
Some of the funds will cancel the insurance after 6 or 12 months of contributions not going into the old account. So it's important to make sure that contributions are going into the old account, and then you can simply just send us an email saying that they want to do a small rollover, whether it's $2,000 or $3,000 or $4,000, whatever the case may be, into the cash management account to top it up. It's pretty simple.
Yep. And once the fund's established, it's then it needs to have a tax return and audit done at the end of the financial year. Typically, it's around sort of February the following year. But what happens in that scenario? So does the team reach out to the clients? Like what involvement? How what do they need to provide to the team to get all the administration work done?
Yeah, so our tax team will have all of our clients earmarked when where their return is due. They always get them done early, plenty of time. There's some advantages for the client doing them early, and then if it's property that they own, it's kind of very similar to owning property in your personal name. There are still items that the fund can get a tax credit for. So depreciation, for example, the only difference is the fund gets a tax credit. They don't get money back in their hand. Obviously, that's a little bit different. But all the things that you can get a deduction for owning property in your personal name, you can still get inside the fund as well.
Yep. So with regards to that, so the fund is established, they have their tax return done. Is the first year the hardest year, obviously collating the information, or what happens after the first tax return's done? Does it become easier and a little bit more? What happens after that point?
Yeah, I usually say to clients that you want to make sure that they do understand that owning an SMSF is a little bit different. Maybe a lot different to just having an industry or retail super fund where it's just set and forget. You don't literally have to look at it ever. If you own property, particularly inside a super fund, then there is going to be an audit, there is going to be a tax return, and they are going to have to provide documents, just like they do if they own property in their personal name. Most of the clients that have owned property before, they know that they're going to have to come up with their rates notices and all of those normal things and provide them to us. Some clients clients are super organised. Some clients just send them into us as they receive them, which is fine, and our tax team sort of file them away on the client's file as they come in.
Yep.
So however the client wants to collate their documents, if they're really organised and they just have them all ready to go at tax time, or if they just want to send them in as they come in, either's fine with us. We don't mind. We're happy to work with the clients in that regard. But yeah, it is best that they keep all of those receipts, because it's really good from a compliance point of view that if there is a transaction inside the cash management account, that it does sort of relate to an official document.
Yeah, of course. What about if the clients have funds left over? So they've purchased a property, for example, they've got money left over, they don't want it sitting in cash. What happens in that regard?
Yeah. So it would depend on the client. Some clients just might have property as the cornerstone of their investment strategy, and they might just want to have some exposure, say for example, to the share market. So it's pretty simple to set up some sort of managed fund in the name of their SMSF, so that they get that exposure to the share market. Property is the cornerstone of their investment strategy. Macquarie actually have a fairly unique product called an accelerator account. Yep. So we always attach an accelerator account to the cash management account. The accelerator account's just a higher interest savings account. It is a type of investment though. Whilst it is in cash, it's still a type of investment. But they can move money in and out of it as they see fit, and they just get a slightly higher return. Most clients, if they do have a longer investment horizon, retirement horizon if you like, they're going to want a better return than what cash is going to get them. So they usually just want some exposure to shares, and there's plenty of good products out there that we can help them establish in terms of managed funds. Some clients are a little bit more adventurous, and they might be a little bit more sophisticated, and they might already be doing some trading, some share trading in their own name. We can help them set up the platform in the right way so they can do that inside their super fund. Some clients, as we spoke about earlier, are right into the crypto space, so they might have a bit of property and a little bit of crypto. So again, we can help them. Set up the crypto investing in the right way.
When you talk about helping them set up accounts, and probably not crypto, but certainly in the equity space, is that something that's handled by the licensed entity in providing some sort of general advice around that?
We won't provide the clients personal advice. Again, that sort of comes back to what we were talking about earlier. Personal advice has to be done very formally. And if the client does want to get personal financial advice, they can seek someone that would do that. There are plenty of financial planners that will provide them with personal financial advice. Again, it's a fairly formal, fairly expensive process, but there's no problem whatsoever in doing that when you've got an SMSF. Anything that we do will be general advice in nature. A lot of clients just want something that's very passive, that's just going to grow, that they don't really have to sort of have much involvement with. So it might just be something like a Vanguard ETF that's just going to track the different indexes. They can choose the level of risk that they want to take, whether it's balanced or growth or high growth, and it just sort of does its thing over time. They don't really have to think about it.
Yep. So it's good that they can obviously have a bit of diversification if property is the cornerstone of their strategy, and then they want some diversification. Then obviously helping the client establish the investment account.
Yeah, well, it's one of the beauties of owning an SMSF. The investment universe gets opened up to pretty much everything. I mean, gold is another really popular asset class at the moment, or precious metals, gold and silver. You and I had a great chat to the guys at Ainsley Bullion fairly recently, and they've helped a few of our clients get involved in the gold and silver space. That have been really, really helpful to a lot of our clients. So gold's another asset that's pretty either physical gold or other types of gold investments they can get involved with. That's another really popular thing to do at the moment.
Yeah, and when I know you just spoke briefly about crypto, and I know you're not providing advice in that space, or we're not providing advice in that space. Is that just like a referral that you hand to one of the crypto exchanges?
Yeah, we've got a really good relationship with Jake from Coin Stash that's helped a lot of our clients. Obviously, it's just a referral arrangement where a lot of the clients, they want to get involved but they don't know how. Jake's just been a really good contact that if the client doesn't know who to speak to or how to get involved, we can send an email to him and say, hey Jake, here's a client. They don't know what to do in the crypto space. Can you help them get everything together? And he's been fantastic to a lot of our clients.
What about let's say if someone wants to sort of buy some industrial property or commercial and lease it back to themselves? I know most of your clients are in the resi space, but can they do that? Can someone?
Yeah, that's a fairly popular thing to do with SMSFs. A lot of business owners. So it's a fairly popular thing to do for doctors, accountants. They might be working out of the premises, and their SMSF can purchase the premises that they work out of, and they can lease it back to their funds. So that's a pretty popular thing to do as well.
Yeah, and then with regard, if they are doing that, the lease that needs to be, I guess, at market rates.
Yeah,
you couldn't sort of charge your fund,
No.
more than over market rates or under market rates. It does need to be at market rates.
Yeah, there is some complexity. It's a little bit different, obviously, than having a property in the residential space where it's just there's a residential market, and it's sort of everyone knows how the residential property market works. It is a little bit different within the commercial space where you can rent the property that you're working out of to yourself. So yeah, it has to be market rates. You can't sort of jack up the rent and pay your super fund more than what the market dictates. So it is a little bit different to the residential space for sure.
Yeah, and then just in that resi space, going back to the resi space, do you get many clients that say, "Oh, can I live in the property?" Or
Yeah, that was probably one of the horror stories that I could have spoken to you about. I actually get asked that a lot: is can we buy a property and live in it? Can we buy a property and rent it to our son? A really popular thing to do, or popular thing that clients want to do, is they buy a property in the town or city where their son or daughter is going to go to university, and then have their kid rent that property off them. But again, it's there's a lot of sort of complexity around doing that. So yeah, normally I'd say just go in the general rental pool. You definitely don't want to be renting a property to a family member or a friend. It's a pretty big no-no, so that is something that a lot of clients want to do. And another really common thing that I get asked a lot is if they can buy the property and live in it or have it as a holiday home, which is obviously a pretty big no-no. Once they're retired, they can do what they want with it, but definitely not while they're working. Whilst the fund's in accumulation phase, they definitely can't do that.
Yeah. Okay. What about if a client, for example, let's say they already own a property, a residential property, and they want their SMSF to purchase it off themselves to free up cash flow? Can they do that?
Geez, you're throwing some pretty good ones at me now, mate. Is it possible? It is possible, but definitely not advisable for the same reasons. If you were to do it, then it would have to be done at market rates. Very, very complex. It is going to cause red flags, and we would advise against doing that at all costs.
Yeah. So yeah, you definitely can't. It's something you definitely can't do.
Yeah.
You can do it with commercial and industrial. You can purchase business real property off yourself with your self-managed super fund. But when it comes to residential property, big no-no.
Yeah.
You can't do that.
Yep.
with regards to any other, so property is obviously the main asset class. I know you've spent many years in the property space.
Yep.
Is there, how have you seen property sort of perform over the last, say, 20 years? Like how has that sort of performed? If you look back to when you first started, 20 odd years ago, in the property space and being around it for so long, how have you seen property perform sort of over that period of time?
Yeah. I mean, if you look back, I mean, I've been in the property space for, 25 years, something like that. At some different place in Australia, property has generally been booming. Whether it's the boom that Sydney had, then it was Melbourne, and Brisbane sort of been more recent. But in between there's been Tasmania, which has been an unbelievable market. Adelaide's been really strong. Perth. So it's property is one of those things. There's not just one property market. There are many property markets in and around Australia, and that's why we always recommend that if you want to get involved in property, then use a property specialist. I think that's really important. A lot of people though, they might know their local market and be pretty familiar, and they might know a fair bit about their local market, and they might be really comfortable investing in their local market. But if you have no idea what you're doing, then definitely use a property specialist, a buyer's agent, or someone like that. I mean, over the last sort of 10 or 20 years, property has at least doubled and then some, regardless of where you've bought in and around Australia.
Yeah. What about, let's say, if you're, I know property has obviously done quite well over the last sort of 20 odd years. There is obviously in all markets, there's ups and downs.
Yeah.
There's certainly ups at the moment, but there's certainly, obviously, looking back over the last 20 years, there's been some downs as well.
For sure.
And liquidity does become a problem at that point in time. Is there any sort of education piece around clients what are you sort of saying to clients in, not so much in the last sort of 5, but in the last downturn that you can remember? Was there sort of any sort of conversational pieces around, sort of staying the course, or what sort of advice do you provide clients in those troughs? I guess
that's a really good question. I mean, one thing that we know for sure, that if you hold the property for long enough, that it will go up in value, whether that happens in year 1 or year 15. I mean, there's a bit of a myth that you hear a lot in the property space, that property doubles every 7 to 10 years. That's an absolute myth. On average, it may have done that over time, but sometimes property may not double over a 15-year period, sometimes even longer. What we do know is if you're able to hold the property for long enough, that it will go up in value over a long period of time. And the good thing about owning property inside superannuation is the ultimate long-term investment. You literally can't touch it until you get to retirement age. So in many ways, it is a really, really good place to buy property, because you are going to hold it for a long period of time. And when you sort of factor in what we spoke about earlier, that big advantage that property has over owning property in your personal name, or superannuation, I should say, owning property in super, that you don't, the advantage that you don't get in your personal name is how it's treated from a tax point of view. If you're say a 40-year-old that might be holding a property for 2 property cycles, if you were to buy that property in your personal name and you decide to sell it at some point, you're probably going to be up for a tax bill in the hundreds of thousands of dollars. If you own it in superannuation, then that money stays with you. You don't pay that money back to the tax man. So it is the ultimate long-term investment, and the longer you hold the property, the less risk there is. One thing that we don't advise is holding a property or trying to own any asset and get in and out really quickly and try to time the market. That's really, really hard to do, if not impossible. Even Warren Buffett, he doesn't claim to have a crystal ball. but the longer you hold the property, the less risk there is. So it's the ultimate long-term investment, and it works really well within superannuation.
Yeah, I guess it's a good point. It's it is quite a it is playing the long game with property, but not just property. I guess with most asset
anything,
classes, obviously the longer it's time in the market, not timing the market as we've talked about previously. But what about with regards to if let's say you've got we talked about downturns. What about clients that have sort of invested in other asset classes where there's been down, they may have invested in sort of shares or something like that, and they've experiencing some down, we're going through a trough period, or there's some sort of a technical recession of some sort, or there's a downturn. What is there conversational, educational pieces around that with clients, or what happens in that regard?
Yeah, all assets, whether it's property or shares or anything else, they all go through their ups and downs. That's part and parcel of investment cycles, and it's not just the share market. That can happen with anything, but it's the share market is a little bit more volatile than the property market. So every sort of few years there is going to be a little bit of volatility in the share market. But usually the worst thing to do is to sell when the market's down. I mean, it's a fairly sort of basic bit of knowledge that you generally don't try and sell when the market's down. If you do want to sell when it's high, but usually it's better to ride out the ups and downs of any market, because we know it happens. It's part and parcel of investing. So you're better off usually to try and wait it out, stick it out, and let that asset class do what it does over the long period of time. Yep.
So when you are talking to clients when they're first establishing their fund, are you sort of talking to them around why they want to establish an SMSF, and what other conversations you're having with clients when you do receive an application to establish an SMSF? Is there sort of like a bit of a screening process, or how does that part of it work? And
if we get a direct lead, so if we get a client that hasn't come through a referral partner, usually if clients come through a referral partner, they already know what they want to do, whether it's property or some sort of fund or crypto. But if a client comes through to us direct, so they might have had a look at our Google reviews, for example, they're just searching, they want to have a self-managed super fund, they're searching the internet as people do, they've come across our Google reviews and they've seen how many amazing Google reviews that we've got, and it might come through as a direct lead. I will always ask them what they're looking to do, to make sure that they're not going to become one of those horror stories that we may have spoken about. So if the client has no idea whatsoever, then it's probably even more important to take them through an education process to explain what they can and can't do. And every now and then that might weed someone out that wants to do something that is not advisable to do within a self-managed super fund. But usually when you have that conversation, most people will sort of say, yeah, look, I have been thinking about property. Property is something that we really like. We've done well with property in the past. And if I do establish that a client wants to invest in property, then I will generally sort of say, have you had your fund assessed from a lending point of view? We spoke about that a little bit earlier, because you definitely wouldn't want to set up a self-managed super fund with the intent of investing in property only to find out that you actually can't do it. So I think it's a really good place to start if someone does want to invest in property, to talk to a broker before they set up the fund.
Yeah. Good advice. Paul, thanks very much for coming on the show today. I really appreciate the insight as to, your conversations with clients and the horror stories that you've sort of experienced, and some of the education you provide the clients. Thanks very much for coming and explaining that all to us.
My pleasure, anytime.
Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF, or book a call with our team to see if we can help you.